Let's be real for a second. When personal finance content started going viral on social media a few years ago, we all had hope. The hope was simple. Maybe, finally, money and finance will be explained in a way that's simple, practical, and accessible to everyday people. Maybe financial literacy would stop being something reserved for Wall Street bros and MBA students and actually become part of everyday conversations. But what happened instead? The same old circus. Instead of simplifying, a lot of creators started selling shortcuts, hacks, and shiny products that sound smart but rarely work in real life. Buy now, pay later became the new normal. Insurance products packaged as investment plus protection, wild promises around crypto, NFTs, and even things like crypto fixed deposits. If you were online between 2020 and 2022, you probably remember the madness. The result? Instead of clarity, we ended up more confused. Instead of building healthy habits with money, many people got trapped in products they didn't fully understand. Or worse, they lost money chasing the next big hack. And now, if you scroll through TikTok, YouTube, or Instagram in 2025, what do you see? Almost every finance video is about extreme success stories. How someone went from $0 to $10 million in 5 years. How a 25-year-old built a $20 million net worth before hitting 30. Or how someone making $40,000 a year turned into a millionaire through some secret strategy. That's the vibe. FOMO, fear of missing out on steroids. These stories don't really teach you finance. They make you feel like you're failing at it. Well, I'm not satisfied with that. So in this video, I want to flip the script. Instead of hacks and guilt, I'll give you a simple plan. In the next 5 to 10 minutes, I'll show you the steps that cover 95% of financial planning for most people in the US. It's not flashy, it won't make you the richest person in your town overnight, but if you follow this, you'll be financially stable, secure, and ahead of 90% of Americans. And guess what? It's boring, but boring works in finance.
Step 1. Protect your income with term life insurance. If someone depends on your income, your spouse, kids, even aging parents, you need term life insurance, not fancy whole life insurance, not cash value insurance, not investment-linked insurance, just plain, simple term life. In the US, a healthy 30-year-old non-smoker can buy a $1 million 20-year term life policy for less than $40 a month. That's it. Cheap and effective. Why does this matter? Because your income is your family's biggest financial asset. If you're making $70,000 a year and you're expected to work for another 30 years, your human capital is worth over $2 million. If something happens to you, your family loses that. Term life bridges that risk. And please, skip the riders and gimmicks unless they make sense, like critical illness or disability coverage. You don't need premium-back guarantees or lifetime coverage promises. That's just upselling. Step 2. Health insurance for the family. In America, one medical emergency can bankrupt you. The average ER visit in 2024 cost around $2,600. A 3-day hospital stay, around $30,000. And if you need surgery, we're talking 6 figures. According to a Kaiser Family Foundation study, 4 in 10 Americans still say they'd struggle to cover an unexpected $1,000 medical bill. That's insane. So what's the solution? Get health insurance that covers your family's needs without too many restrictions. Yes, premiums are expensive, but the risk of being uninsured is worse. If you're employed, your workplace plan is usually the cheapest and safest option. If you're self-employed or freelancing, compare options on healthcare.gov.
Step 3. Retirement planning. Start early, use tax-advantaged accounts. Retirement planning in the U.S. is built around 3 main accounts. 401k, especially if your employer matches contributions, always max out the match. That's free money. Roth IRA. Grow your money tax-free, and when you withdraw at retirement, you don't pay a dime in taxes. In 2025, the contribution limit is $7,000 a year, or $8,000 if you're over 50. HSA, Health savings account. If you're eligible, it's the most tax-advantaged account in America. Contributions are tax-deductible, growth is tax-free, and withdrawals for healthcare are tax-free. Here's a fact. If a 25-year-old invests just $500 a month in a simple S&P 500 index fund inside a Roth IRA, by 65, they could have over $1.5 million, assuming a 7% average annual return. That's without picking stocks, without hacks, without gambling. Step 4. Emergency fund, your financial shock absorber. Life throws curveballs. Your car breaks down, you lose a job, a family emergency happens. According to Bankrate, only 44% of Americans in 2024 said they could cover a $1,000 emergency from savings. That means more than half rely on credit cards, loans, or family. The fix? Build an emergency fund with 3 to 6 months of living expenses. If your monthly household expense is $3,000, aim for at least $9,000 to $18,000 in a high-yield savings account or money market account. Don't chase returns here. This money is not for growth, it's for peace of mind. Step 5. Long-term goals. Use index funds. For goals 10 years or longer, like buying a house, funding your kids' college, or just building wealth, stick to index funds. You don't need to pick stocks or time the market. Warren Buffett has said it many times. Most investors should just buy an S&P 500 index fund and hold. Let's do quick math. If you invest $300 a month in an S&P 500 index fund for 30 years at a 7% annual return, you'll end up with $366,000. Double it to $600 a month and you're close to $730,000. That's the power of boring, consistent investing. Step 6. Hedge with gold, but smartly. Gold isn't about getting rich, it's about protection. When markets crash, gold usually holds or goes up. In 2008, during the financial crisis, the S&P 500 fell 38%, while gold rose 5%. But don't buy physical gold coins or jewelry. In the US, you have better options, gold ETFs like GLD, or even allocating a small portion to commodities funds. Keep it around 5 to 10% of your portfolio.
Step 7. Avoid the traps. Trading, fads, and gambling. Here's where most people slip. They think trading stocks, options, or crypto will make them rich fast, but the data says otherwise. According to a 2023 study, 97% of day traders lost money over a 5-year period. And get this, only 1% consistently outperformed the market. Trading is designed to make brokers rich, not you. They earn from fees, spreads, and commissions. You earn stress and regret. Instead, stick with the basics: insurance, retirement accounts, emergency funds, and index funds. Step 8. Cut down on financial content addiction. Let's talk about the elephant in the room. We consume way too much financial content. Every platform, TikTok, Instagram, YouTube, X, runs on algorithms that want your attention. Finance creators, even well-meaning ones, are under pressure to keep you hooked. That's why they push extreme stories, shortcuts, and hacks, because boring but effective doesn't go viral. If you feel overwhelmed, try this. Uninstall the apps. Or, if that feels too harsh, at least use them only in your web browser. It adds friction, which reduces mindless scrolling. Remember, the best engineers in the world are paid to keep you addicted. Don't let them. Final thoughts. Be happy with the top 10%. Here's the truth. Following these boring steps won't make you a billionaire, but it will make you financially free. You won't be the richest person in your circle, but you'll be safer, calmer, and ahead of 9 out of 10 Americans. Everyone wants to be in the top 1%, but to get there, you need extreme risks, and most people end up failing. Instead, aim for the top 10%. That's more than enough. Remember, financial planning isn't about hacks. It's about discipline, patience, and simplicity. So don't fall for shiny distractions. Do the basics consistently. That's the real hack. If this video gave you clarity, share it with someone who's drowning in confusing finance hacks.
And hey, if you found this helpful, subscribe to the channel and hit the bell icon. Not because I want to play the algorithm game, but because I want you to keep learning the stuff that actually works. Finance doesn't have to be overwhelming. Stick to the boring basics, and you'll thank yourself later.